In today's interest rate markets, let's take a look at the 10-year note futures as they're realizing some higher price action today. 10-year note futures are up over a point currently, pushing up towards that 119 handle, 118.29, and it's the top end of the range for today. And if we were to settle out here, which it appears we will, this is the highest close for the 10-year note futures in 7 sessions, so a week and a half. And that's coming off 3 days of selling pressure. So we negated that 3 days and then some as the markets have pushed back up towards the top end of the range over the last 2 weeks. And when you look at some of the driving factors today, I think there's a couple things to point to. Number one, ECB announcement this morning. They chose to raise interest rates by 50 basis points, which is more than what was anticipated. We did see a reaction to that initially, but ultimately it does appear that the reaction in the treasury markets is one that they're seeing some buying pressure today after filtering through that announcement and the press conference. But probably just as big a driver, if not more so, was the Philly Fed data this morning, which came in much lower than anticipated, showing the economic data set that they delivered as far as weakening and weakening more than what was anticipated. So I think that's one of the bigger drivers today as to why we're seeing a reset of expectations as far as the interest rate markets are concerned. So looking at the yields, 10-year yield down 12.5 basis points currently to 291 basis points. So we are again pushing back down towards the low end of the recent range. And the yield curve is shifting as well today, where the middle of the curve is rallying more so than the wings. So we're seeing the 2s through the 10s showing stronger reaction to some of the data points and some of the storylines out there today. And the inversion of the yield curve continues as we are seeing the yield curve flattening as well. So the short end of the curve is holding up relatively well, and that's the 6-month, 3-month, 6-month, and 1 years. And then the middle of the curve is we're seeing, again, that rally pushing those yields lower, and the back end of the curve is rallying some, but not as much as the middle. So an interesting dynamic when you look at the yield curve today, where the middle of the curve is moving more so than the wings.